Welcome to Training the Newbie, the podcast where we explore what happens when two worlds collide. I'm your host, Bill, and in this series, I'm taking on a bold challenge, training someone from the halls of academia, a professor with a rich background in leadership and entrepreneurship, to navigate the fast-paced, high-stakes world of Forex trading. It's a journey of transformation, uncertainty and insight, where theory meets practice and strategy meets screen time. Whether you're a teacher, an artist, a coder, or just someone who's curious about making your money work smarter, this show is for you, because if a seasoned academic can step into the Forex arena and learn to read the markets like a pro, why not you? Let's dive in. Okay, so any questions on any of the stuff we covered last week?
I don't think so. I got a third of the way through the Japanese candlestick book.
Oh, you like that, huh?
Yeah, it's really good. And filling it with notes already. And I really like how he is writing it and the kind of history behind it. I find that so many of the old textbooks do a better job at explaining the history of why things are called the way that they are and explaining the underlying logic in ways that modern textbooks often aren't. And yeah, I really liked how he was defining what technical analysis is. I should have brought it with me. I could have read it back to you, but basically that it's a misnomer, I realized, at least I interpreted reading this thing, which is that it's not really, well, the things that we're watching that are represented by candlesticks are not really technical in the sense of objective or purely data-driven or whatever, but it's actually a representation of the emotionality, the kind of spirit animals of the market. Yeah. So it's a misnomer to call it technical. It really should be better framed as like emotional analysis of the market or something.
Yes, it's fear or greed in the market, a visual representation of that. It's pretty cool.
Yeah, agreed.
Today, we are going to talk about a topic I think you'll like, psychology. All right. So these are the top issues that people run across in psychology. And I think we should be able to get through all of this in under an hour, unless you ask a million questions. But these appear to be the top things that people struggle with. Number one being the fear of losing money. In my experience in training people, they either can't push the button or they can't stop pushing the button. And that has a lot to do with this fear of losing money. The people who are paralyzed by the fear of losing money are the ones that have a really difficult time, even though everything on the chart and in their system is telling them that they should take the trade, have really struggled with pushing the button to take the trade because of this fear. And you have to learn, we were talking about this last time, that bedside manner doctor thing where the system or the process that you use is so well defined and you have so much faith in it that you just can hit the button and just be comfortable that it's going to work for you. So
Yeah.
that's number one.
I don't think it's a fear of losing. I think it's an avoidance of responsibility. Because people I think that's the hesitancy either way. That's because they don't want to be responsible for the loss. And so they don't want to either enter it and then they don't want to deal with the consequences. And I think that's more of an avoidance of responsibility problem than it is just a strictly fear problem.
Exactly. Yeah. And that's actually in a million books on trading is people have a really difficult time admitting that they're wrong. You got to get in this mode. Okay, took a trade. Oh, it's not right. I got to get out. I was wrong. And just, that's it. You're done. You just get out. So that's the number one thing. The second biggest thing that people run into is this, what they call FOMO or fear of missing out.
Yep.
And that's a really common thing. Like Bitcoin is a good example of that. Like I've had people come up to me at work and say, hey, should I buy Bitcoin? And this and that, because everybody's buying Bitcoin kind of a thing.
So you just hear about it vaguely.
Yes. So many people make money or losing decisions based on, zero research. And that drives me out of my mind when I hear people say that kind of stuff. I'm like, it can be a very valuable tool for making money, but you have to understand what's going on and why you're getting into that investment. I just apply the same process to that I apply to any other trade that I would take. There's still some wild stuff out there. It's not regulated. God knows if you'll ever be able to take your money out in the long run that you put in. All kinds of stuff. For me personally, there's too much that's undefined about that particular instrument to invest in. So I avoid it personally. But you might like that. And I know plenty of people that love trading that thing and have made a bunch of money with it. So it's your call what you want to do. That also leads to the very next one, which is overconfidence. Remember, I mentioned last time that the worst thing that can happen to you when you're learning how to trade is you get this winning streak right away, because then you suddenly think that your process or your strategy is flawless, and you get greedy and you start to ratchet up the risk that you're taking. And usually what ends up happening is you have a bunch of wins in a row, and then you get to that final trade where you've just bet the farm
Yeah.
because you're so confident that your thing is going to work. And next thing you're crashing into the earth and you're going to die. It does two things. You obviously lose a bunch of money, but two is it crushes your confidence and your stability in trading. And you got to be really careful with that. That ties into emotional decision making. This was a really difficult one for me to overcome because when I first started, I had not developed that sort of thick doctor skin that I call it to looking at the trades. And I experimented with a bunch of different things to overcome it. And the one that I found the most effective was, once you have your system designed and you're confident in the results from that system, then what I do is I take the trades, I put in my profit targets and my stop losses, and I literally walk away. I go do the dishes or walk the dogs or go for a walk or something, just so I'm not sitting there staring at the screen, because your mind plays these tricks on you. You just start to use that brain of yours and just start imagining all these possible outcomes for the trade. And then you usually will end up making a hasty decision based on that and get out of a trade too early or get out of a trade too late, et cetera, et cetera.
Yeah.
That one's really hard. The doubt and insecurity part, I've seen a lot of really confident people get reduced to mush trying to learn how to trade, because they have this weird thing in your life. You get really good at something. I don't care what that is, whether it's a sport or you become a college professor, right? So you're really smart in whatever it is that you're teaching. But when you get to trading, this thing just starts to chip away at your self-confidence and all your little secrets. I always tell people that trading brings out all your hidden demons, right? All these little things from your childhood that you used to be afraid of, and it just amplifies them all. And you start to question all of your decisions in the process of going through, do I take this trade? Do I not take this trade? Oh my God, it's going against me. Should I get out? Should I get in? The thing's running like crazy, that kind of stuff. So that also chips away at you. Impatience is another thing I found. People, depending on the time period that you decide to trade in, for me, it's a 2.5 hour window in the morning, sometimes at night, about the same amount of time. I like to have some results from what I'm putting into it. I trade in a 15-minute time period most of the time.
How does it get down selected from the 2 hours to the 15 minutes? Or what do you mean when you say, oh, I trade for 2 hours a day in the morning, but only for 15 minutes?
I'm trading 2 hours a day, but I'm looking at charts that are in 15-minute increments.
Gotcha.
Yeah, that's what I mean. Because I know just from experience, having sat in this chair for multiple decades watching the markets, I should get maybe two or three opportunities in that 2 hour period, in that 15-minute time frame. The number of opportunities that you get, you may not get more or less depending on the time frame that you trade in, but there will be longer periods of time in between when the opportunities arise. If I'm trading a 1 minute chart, I might get 30 opportunities in that 2 hour period. If I'm in a 15-minute chart, I might get two or three. If I'm in a daily chart, I might not get anything. I might get two or three in a week. So that also plays into how you end up wanting to design your system. You have to craft it so that it fits your lifestyle. Some people have the ability to sit in front of the screen and watch it in 15-minute increments because of what they do. So I've trained several people who are in sales to do this while they're putting together their lead lists, figuring out when they're going to do their telemarketing later in the morning and reviewing their script. They can just have this running on the side and they can be in front of that screen. Whereas if you have a job that demands you physically be there and focus on whatever it is that you're doing, you obviously can't do that. So you might want to be more of a position trader or a swing trader where your opportunity may show up only once or twice a week. You place the trade, you put in your profit targets and stop losses, and you go about your business with your life, kind of a thing, and periodically check back. When I manage the family fund, that's how that works for me. I maybe look at that once a week or every 2 weeks just to see what it's doing. Takes a lot longer period of time for those instruments to move in one direction or the other. So I don't have to be sitting there glued looking at it 24 hours a day. This next one down here called attachment to trades. That one's interesting too, because, and this goes back to that first point you made of not wanting to be responsible. Some people get so attached to a trade and are so convinced that they're right, even when they're clearly wrong about the trade, they won't get out of it because they don't want to admit that they were wrong, right? And one of the tenets of trading is cut your losses short and let your profits run. Most people do the exact opposite. As soon as they're a little bit profitable, they get out. They're like, oh my God, it's profitable. I got to get out and get my money. And then if it's going against them, they're like, oh, I'm going to stay in a little longer, see what happens. Or they'll change the time frame. I was in a 15-minute, but now I'm really looking at it on an hour or a 4 hour chart because it looks better on that chart. Has an opportunity to go longer and maybe I'll get out of this thing with a profit, etc. That is a recipe for disaster. Most people will just burn through their account especially when you switch time frames and strategies. A lot of people don't understand probability thing we were talking about last week. So as soon as a strategy isn't working, they're like, oh, this is shit. I got to try something else. This doesn't work. I'm going to try a different strategy. And they'll just bounce from strategy to strategy, keep changing their time frames. All that stuff just torpedoes you. Consistency is the key to success. And being patient and just letting it do its thing. Bias and cognitive errors. That's the thing where I talk about where I go do the dishes or walk the dogs or take a walk because my mind just plays tricks on me if I just sit here and stare at these things. I just start to dream up too many different scenarios on what might be going on, where it's going to, what it's going to do. I have to have confidence in what I built, that it's successful and it will continue to be successful, and it has been. For me, that last one has become a lot less of a problem than it used to be in the past, but it was a big problem in the past, just so you're aware. Any questions on any of those?
No, it's all making sense.
Okay, cool. So how do you solve these things? So these are the steps. A lot of these are in the psychology book that I gave you to take a look at. The first step is developing a plan. Hopefully going to be your goal out of going through this thing with me is coming up with a plan for how you're going to trade and sticking to that plan. The second step is to set realistic expectations. That's why I asked you that on the first day. What do you expect? And you have very realistic expectations. You want to learn how to do this. If I make a little bit of money doing it, that's awesome. And if I get better and better at it, that's even great. Practical risk management is the third step. You got to come up with that kind of on your own. I'll give you some guidelines and ideas on how to do that, but you have to decide how much money you're going to dedicate to trading. That has to be money that you're willing to completely lose. So don't put your mortgage money in there. I've had people do that in the past and lie to me. It's funny, these weird things that people do. Regardless of the size of your account, maybe a 1 to 3% of your account should be what you're willing to risk on an individual trade, because it'll take an awful lot of losses for you to chew through an account with that kind of a structure. So I was going through all these old boxes and I found all my trading journals from 20 years ago.
Oh, wow.
So I forget what you call those notebooks, those like black checkered things with just empty pages in it. And those things were filled. I think I found like 10 or 11 of them. And I was just flipping through them, looking at my thoughts from 20 years ago. It's very cathartic, just looking back at what I was thinking back then and how much I progressed since then. A lot of it, just writing it down on a piece of paper. I took this trade. This is how I structured it. I made a bunch of money or I lost a bunch of money on this particular trade. And then usually it's like you write down what you did, then you write down the result, then you write down what you think you could do better or different in the next trade to fix that problem or make the success even better. That's something that I would highly recommend that you think about doing. These days it's much easier. You can do it electronically. I just like the tactical feel of having a piece of paper that you just have sitting beside you and you just write notes down. That's what I did, but people do it all different ways. Emotional regulation is a struggle for some people. That's hard because some people are very emotional. They get angry. I remember there was this YouTube video. You know how I start to watch these videos and you get these videos and
Are you an active trader looking to elevate your trading skills? We invite you to join the Trade Faction, a community where you can witness trades called out live. To connect with fellow traders and gain real-time insights, simply click the link in the description or scan the QR code to join our free Slack channel. This is a great opportunity to enhance your trading strategies and stay ahead of the market. Also, don't forget to download our new Forex AI Sage app in the Apple App Store to use the latest in agentic AI to help you trade. So what are you waiting for? Click that link or scan the QR code now and download the app today.
feed and stuff.
Yeah.
And it was this guy who just literally what he did was he took a trade. I think he lost like 20 grand on this trade. And it's just him just having a hissy fit. I took this trade and I lost all his money and he's just throwing shit on his desk and doing all this stuff. And I thought it was sad, but it was hilarious at the
Yeah.
same time. That's the emotional regulation thing. You got to get in that sort of zombie mode where you don't want to let this get to your brain and your thinking. One of the things that you can do to develop all those things above on this mind map is to use simulation trading. And TradingView has a wonderful tool in there to allow you to do what people call simulation trading or paper trading. So you can design a system, you can go back in time and it will replay charts. There's a button in there that picks just a random day in the past, and then you can just trade as if it was today. And you can put in simulated trades. You can change the size of the trades. You can put in your stop loss and your profit target, etc. That I found to be very useful as far as a tool, just to have something to practice on. Use for it that I've found from a psychological standpoint, and I did this by accident. Like if I have a streak of wins and I'm just like, I know the big green greed monsters bit me on the ass, I will flip into the simulator and paper trade going forward, but I've eliminated the risk of giving back all of the profits that I made for the day. So I found it more as a therapy tool sometimes to use the simulator and go in there when I just to exhaust myself and not let greed take over. I can just keep trading and trading, and then eventually I'm like, oh, this sucks. I'm not going to do it anymore. And then the little window of time has evaporated, so there's no point in doing it anymore. So that saved my butt a bunch of times.
Interesting.
Staying educated, this one's hard. I'm trying to give you really high quality things to help you with your reference material. There are so many, what my dad would call shysters on the internet, right? And they cherry pick the trades that they're showing you. Some of their information is accurate, some of it is blatant lies. There's this one guy, I don't know if you've run across this. I call it a religion or a cult, the cult of ICT. Have you run across this? It stands for Inner Circle Trader. There was this guy. He hit the scene about 10 years ago. I haven't seen much from him lately. He got super popular. There's just a jillion videos about the ICT method. And I got hooked like everybody else because I was watching this guy and he's showing me all these super profitable trades. And I eventually stopped watching because he's the kind of person that just can talk for hours and not tell you anything. Does that make
Yeah.
sense?
Oh, yeah.
Okay. I would watch his videos and they were all like hours long, and he would go through this convoluted, and this happens, and then there's this bank order simulation thingy going on, and this and that, and I could never distill it down to here are the steps you need to do to leverage this idea in trading. I just could never get there. But other people claim that they have. They pump out tons and tons of videos about it. There's always some video that says, look for this pattern. It's New York open at 8 o'clock, and then watch it hit this high, and then you're going to get three bars that look like this, and then you're going to go off and do something else, and then it's going to give you a 90 pip run. And I'm just like, I don't think so. So I just gave up on, I gave up on really watching a lot of other people because I think, at least for me personally, what I try to tell other people is if you design the thing yourself and you understand exactly why you're making the decisions to trade and when, then you don't need all those other people. You don't, it's just a distraction. It just ends up being something that'll take you down the wrong path. Now, the thing to be cautious about this is if you do that thing where I said before, where you try a strategy, but you ignore the laws of probability, and then you do a couple trades and you lose and you go, oh, this is crap. That's a really easy trap to get stuck in is you drop down to this stay educated line and you go in and you start watching all kinds of YouTube videos, and this guy's doing it that way and this woman's doing it that way and that person's doing it another way. You'll end up in this endless sort of, it's almost like doom scrolling for traders.
Right.
You're not making any progress and you're just slowly burning through your money, and eventually you probably will get frustrated and quit. I've noticed a bunch of new videos that have just hit the interweb of people saying, so are you just about ready to quit? Don't quit, and here's why. And I'm laughing at some of those. So
Yep.
that's an interesting little trend I'm seeing there as well. There are a couple guys that I will introduce you to once you've started to trade that I respect what they're posting because they actually show you their wins and their losses. And I'm familiar with their techniques, and I agree that those are successful techniques that you can use. There's literally one guy, and he's funny as hell, and he doesn't put anything on his charts. He's just, I'm looking at the chart. I think it's going to go down, or I think it's going to go up. He goes, and then I just set up my risk structure so that if I'm right or wrong, if I'm wrong, I'm going to lose less money than if I'm right. Meaning that when he's right, he makes more profit than he loses when he's wrong. And he makes big bucks. He makes huge bucks. And he puts nothing on his charts. I can do that as well. I can just look at a chart, and I've just been doing it for so long. It's weird. It's like a internalized, it's like playing the guitar, right? I know where the scales are. I know the notes that'll fit in a specific key. So I can navigate around the guitar neck without thinking I'll be hitting notes that sound good. It's the same kind of a concept. Once you've internalized it, you can look at a chart. You really don't need anything. The reason that I put things on a chart is because it saves me time. I know the computer isn't going to screw your reading. It's going to do exactly what I told it to do. So when it says this is happening or that's happening, I trust it. Limit information overload that fits in with the guy who doesn't put anything on their charts. I used to do this thing for the podcast called WTF Charts of the Day. And I would find these charts that people are, because TradingView is also, there's a social media element to it. So you can post what are called ideas. And ideas are like, here's a chart, here's what I'm thinking. It takes a snapshot in time, and then you can go back a couple days later and it lets you forward through the chart to see if that person was right or wrong. And there's some charts in there that I'm like, oh my God, what is wrong with this person? There's like 47 different indicators on the chart. You can't even see the price anymore. There's so much crap on the chart. I think for a lot of people that gives them comfort having all those indicators on the chart. And I think it ties in with what you were saying. They don't want to take responsibility for it. So they're like, oh, my indicator said to do it, and it was still wrong. It's not my fault, kind of a thing.
Yep.
Have support systems. This is more of a personal thing. And Dave ran into this too. When you do start to do this, what I would recommend is you create an environment where you can sit and it's quiet and you can focus and you don't have interruptions. I know you have a small child. When My big boy now, who's 27, was just a toddler. I was trading then. And I remember one time my wife asked me to watch him for a second, threw him on my lap. And when I wasn't paying attention, he banged on a keyboard and I lost $11,000.
Oh,
And I had this really confusing, emotional, I want to kill my kid, but I can't kill my kid because I love my kid.
where do I put the blame?
It's my fault. I shouldn't have let him be sitting in my lap, banging on stuff on my desk, kind of a thing. So the moral of that story is quiet place, have a
Locked door.
conversation, have a conversation with your spouse. This is a business. I really want to focus. Really want to be successful. Please respect that because another thing you're going to run into is the honey-do stuff, right? Hey, can you take the garbage out? Can you walk the dog? Can you do? And you're like in the middle of battle, right? And they want you to walk away from the screen. So just make sure you got that all in sync the way you need it. Learn to take breaks. Like I said, once I place a trade, I'm out of there. The one thing I really like is the Apple Watch I have now because the notifications for the trades go to the watch. So I can be like anywhere. And if a alert hits, I can walk back to my desk and take the trade. Or if I'm in a trade, it'll tell me if I got stopped out or it'll tell me if I got a profit, kind of a thing. So that's cool. You don't have to be super focused on the trade at the moment.
Yep.
Last but not least, I want to give you some more reference materials. And the first one I'm going to give you is a series of books. There are 5 books in this series. They're by Jack Schwager. He interviews a bunch of traders. I read this book a long time ago, probably 25, 30 years ago. That's the first book, the Market Wizards book. What Schwager did is he wrote a series of books and he went in and I don't know how he found these guys, but he found like these super successful traders and he would sit down with them for a day or a week or whatever. He would go to their homes and he would just talk to them and ask them, how do you do this? The thing I find most interesting about this series of books is everybody did it completely differently. They all had their own. This is where it started to gel for me. Oh, you have to figure out your own shit, right? And just stick to that and keep doing it once you've figured it out. That was the biggest point I got out of it. I think it's just incredibly interesting to listen to these guys and women as to how they got into it, how they figured out a system that worked for them, how they handled their wins, how they handled their losses. Some of these people are making millions of dollars trading. The one that I'm about halfway through is this one right here, the Unknown Market Wizards. This is fairly current. It's from 2023. That one I find extremely fascinating because the technology is pretty current. Back when you go to this first one, a lot of people were still using a brokerage account in the newspaper to figure out when to get in and out of trades, whereas in this book, they got the internet and they got all these fancy charting systems, et cetera. So just that leverage right there is really interesting. The other thing that I'm going to give you, let me get it here for you, are a series of 3 videos. Post these in your text. These 3 videos are, I can't remember the guy's name, but he had a successful trading company and he picked, I think, a half a dozen random people off the street and he gave them money to trade. He gave them like a couple of weeks of training and he gave them the money to trade in their account. And I forget what the deal was. I think he explains it in the video, but they were offered a percentage of their wins if they were successful. And it's everything from a housewife to an ex Special Forces British SAS guy to an IT guy and everything you could think of in between. The reason that I like to give these videos to folks to watch is because the exercise that I used to give in the course was like, which person do you relate to the most? Which one of these people is you or is really close to you? Because they're literally the gamut. And it's also very interesting to see who was successful and who failed. I'm not going to spoil it for you because I want you to see the results at the end of the 3rd video. But the person that I thought was going to be successful was not. And that spoke volumes to me about how little I knew about how you go about doing this stuff. I found these videos when I very first started. Fortunately, they're still being posted. I should probably download them so that I have a permanent copy of them. And maybe I'll put that as a to-do for this week because
Yep.
I just found them really useful. So that's what I wanted to cover today. Next week, we get into what people find the most fun, which is the actual kind of trading part to it. And I think I'll hold off showing you the simulator till then because it'll be more in context and make more sense. So
Okay.
we got one, then two, and maybe three more sessions. Next week, we'll go through all kinds of different trading strategies and styles. Then we'll go through the tactical piece of setting up your system and getting your brokerage account set up and figuring out what time frame you want to trade in. And then the final piece is actually a business piece that I'm going to go over. I'm going to give you some tips and ideas of I've set this up as a business. There are some pros and cons to doing it either way. I'll explain to you what those are. Talk to you a little bit about taxes and cash flow management strategies and things like that I think will be helpful in moving forward with this. I am working on a swing trading system now. I've got it mostly working. I'll show you that next week too. That's it, unless you have any questions about any of the pink stuff.
No, this was really good. I'll try to watch those videos this week and
Yep.
keep reading my books.
It's a little long, but I think you'll like them.
Great.
Okay?